Welcome to Business Authority Radio, bringing you insights from today's thought leaders, professionals, and influencers. With your hosts, Neil Howe and Craig Williams.
Hello and welcome to the show. This is your host, Neil Howe, and today my special guest is Jason Kovan. He is an attorney from the law offices of Jason Kovan in Miami, Florida. And he is a U.S. licensed tax attorney and CPA with over 20 years experience in both international and domestic tax issues. He represents individuals, companies, and partnerships with respect to U.S. federal and state tax filings, planning and structuring issues, tax controversy, and general tax advice. Welcome to the show, Jason.
Thank you very much for having me, Neil.
Well, tell me a little bit about the law offices of Jason R. Kovan and what kind of clients that you help.
Sure. I mean, we are a tax firm, and our clients reside all throughout the world. I have clients in Kuwait, Saudi Arabia, Israel, UK, and a ton of clients in the United States as well. I'd say probably about 70% of our client base has some sort of international presence and international tax issues. But, the remaining 30% are just individuals residing in Florida, Georgia, Texas, whatnot, that have just pure U.S. domestic issues. I've been in this business now for over 20 years. I got my start, believe it or not, with Arthur Andersen. I was there through the bitter end. It was a great firm, and after that, I was with Burger King Corporation and a senior manager in their tax department. And prior to being full time with my law practice, I was a director for a Big Four accounting firm.
Awesome. Well, 70% of your clientele being outside the United States, that certainly makes for some interesting cases dealing with all these different countries, but you're always going to get friends and family from next door that need somebody to do their taxes or help them with their tax issues as well. So I can understand that there's a lot of people from around your area that you help with as well. So tell me more about this international tax filing. What kind of problems or situations do you help internationals with when it comes to filing their taxes?
Sure. Believe it or not, there's probably around 7 million U.S. citizens or green card holders residing outside the United States. And many of them and the term expat, by the way, it's really bad. It's a really bad term. These are just citizens that happen to live elsewhere because they have spouses there, they have work there, or they just, like weather somewhere else. With that being said, many of them were born in the United States and returned with their parents after their parents were done studying the United States to their foreign country where their parents were born. And so maybe you have somebody who was born in New York at the age of 3, moved back to the UK and lived in the UK for the past 30 years and had no idea that he had a U.S. tax filing obligation. He knew he had a U.S. passport and he could go through the U.S. immigration line anytime he's going through Newark or JFK. But he never knew he had to file a tax return because he files taxes in the country of his residence, in this case, the UK. And then they find out, through media sources or through friends or from their foreign bank, let's take UBS in London, for example, that they're asking them to sign a form called a W-9, asserting that they are, in fact, a U.S. tax resident, a U.S. tax person, rather. And when they do that, they realize that they've never filed a tax return and they were, in fact, required to do so. And I get calls from people all the time, panicked, thinking they're going to go to jail because they didn't file their tax returns. And, nothing could really be further from the truth because these people who live outside the United States and weren't aware of their obligation, there are programs to get them caught up on their tax filing obligations. The IRS is not in the business of throwing people into jail or prosecuting people who were not aware of their obligations. If you look at traditionally at who the IRS is prosecuting, it's a guy who's sitting in Miami that had offshore gambling income that he never reported and never reported his foreign bank account report. They're not going after the guy that's sitting in London that was born in the United States, moved back at the age of 3 and didn't know he had to file. So there's all sorts of issues with these people that never filed, didn't know they had to report the existence of their foreign bank accounts to the U.S. Treasury and to the IRS. And these are the type of people that we help.
Okay, so I'm going to ask from my own perspective because I kind of fall into that situation that you just mentioned there. I am from Scotland originally and been living in the United States for 23 years or so. I got a green card now, but I'm considering going back to Scotland this summer. So, what obligations do I have to the United States if I have a business here, but also if I want to do the same business in the UK?
Sure. So anybody that has a green card, I would start out by saying, is essentially treated in the same tax manner as someone who is actually born in the U.S. and has a U.S. passport. So I'll start by saying that. Where things get a little more tricky for somebody who's living in the U.S. with a green card is that if they have maintained bank accounts or pension accounts in a foreign country, and the total amount of all those foreign financial accounts exceeds $10,000 or more, they are required to file a disclosure with the U.S. Treasury. It's called a Form 114, disclosing where they have that account, the dollar amount of that account, the address of that account, information like that. The failure to file this disclosure form when required can result in up to a $10,000 penalty per foreign financial account per year. So I'll give you a kind of draconian example, but let's say somebody's got 9 pension accounts with $1 each in there, and they have a bank account with $10,000. So altogether, their 10 accounts are $10,009. If they didn't file their foreign bank account report and the IRS comes to them, they could get tagged with $100,000 in non-filing penalties over 6 years. That's $600,000. So that's why it's so important for somebody to make sure that they're getting the appropriate advice to deal with these type of accounts. And many people, even living in the United States, are unaware that they are in fact required to report this. And I would say that if you're familiar with your 1040 tax return, there's a schedule called the Schedule B, which is interest and dividend disclosure. And most people don't even bother looking at what's at the bottom of this form. But at the bottom of the form, they're asking whether or not somebody has some sort of foreign financial account. And they're required to check a box. And then they're required to check another box if the value of those accounts are $10,000 or more. So that's really the gateway for the IRS to get some sort of an indication that somebody is in fact required to be filing these disclosures.
Okay, so if you have business in one country and you also have business in the other country, do you have to pay both countries just like you only had the business in that one country?
So it's an interesting question, and I would say it depends. Let's say that you were still living in Scotland and you were a U.S. citizen, just for purposes of this example. If you were, being paid as a salaried employee, and if you made $100,000 a year or less, you will not have to pay U.S. income tax. The reason being is because the U.S. tax code exempts from taxation up to around $101,000 of foreign earned income. Okay. Now, in addition to this, someone can elect not to take that exclusion and can instead take a foreign tax credit for taxes paid in that foreign country. So if I'm living in a country, let's just say as an example, Israel, that has a very high tax rate on wages, then at the end of the day, it may be more advantageous for somebody to take that foreign tax credit. So in this situation, this person would still be required to file a U.S. tax return, but they don't have to pay tax on these limited facts. Now, you can have a different set of circumstances where this person is living in a foreign country and they have a capital gain. And for whatever reason, that capital gain is exempt in the foreign country, but the United States would still tax it. So on that type of transaction, it would very well be possible that the U.S. person, and I'm using that term as somebody who has a green card or a passport for this example, would then have to pay tax to the United States. So it all depends on the facts and circumstances, where the person's living, and whether or not they're paying tax in a foreign country.
So it's not necessarily that you're going to have to pay taxes twice to two different countries. There's a way around that to where people just pay once, basically, and get the tax credit or something like that. That's going to even things out.
That's exactly right. And in addition to being able to rely on the tax code for assistance in mitigating double taxation, the United States has tax treaties with most countries out there, so that at the end of the day, the tax treaty, let's say between the United States and UK, will offer some sort of a mechanism to ensure that somebody who's taxed in both jurisdictions will in fact not be paying double tax.
Mm-hmm. So with this new tax bill that has just been released, and I know we don't know everything about it so far, but what changes do you know that have been made to overseas tax laws that might benefit U.S. residents?
Well, believe it or not, there aren't a lot of changes that actually help the person that's residing overseas. There are a number of changes that will help the U.S. person that's residing in the United States. So I'll start with the back end first, which is how it affects people residing overseas, and then I'll come back to those that are living in the U.S. So if a U.S. person who's living in the U.K., for example, owns a foreign company, and let's say this foreign company is engaged in some sort of active business, under the prior regime, and when I mean the prior U.S. tax regime, we're talking, December 31st, 2017, and prior law, any income that's earned by that foreign company, for the most part, is not subject to tax in the United States. And the reason being is because that foreign company is a closed company. It's basically called a blocker entity, and the income that's earned by that company does not generally flow to the U.S. owner of that company. Okay? There are some exceptions. If that company earns passive income, such as interest, dividends, and other type of capital gains, there is attribution to the U.S. person, and they then are required to recognize what's called Subpart F income on their individual tax returns. And I'm not going to go beyond that because it's a very complicated area of the law. However, the new tax regime, and this is where all the media attention is being focused on Apple and the Googles of the world, is that Apple has all this money that's stashed offshore. So under the new Trump tax reform, what happened is all this money that was sitting in these profitable companies are being deemed repatriated. So if a company has had historical earnings in a foreign company, the U.S. is now going to tax those either at around 15.5% or 8%. And it's a one-time tax on the earnings of this foreign company. So anybody, whether it's a U.S. person that lives in the U.S. or a U.S. person that resides overseas and owns a foreign company, could get hit with a tax bill by virtue of the earnings of that foreign company. So it's not a favorable environment for them. The one bone that they threw to these type of taxpayers is that if there is in fact a tax liability, they will be allowed to spread that liability over 8 years and basically pay the tax man over an 8-year period. So that is one very unfavorable aspect. Now, there are a number of favorable changes to the U.S. tax code that the people are very, very happy about. And I'll start with the easy ones first. So prior to the new Trump reform, and it's really not great to call Trump reform, but that's just the common terminology because it's really the Republican Congress that pushes through, and Trump gave his rubber stamp on it, is that the federal corporate tax rate went as high as 35%. So the new corporate tax rate in the United States for what are called C corporations for tax years beginning after December 31st, 2017, i.e., which is this current year, is reduced to 21%. So, I mean, that's really fantastic because it's going to, at least in theory, spur investment in the United States. The United States had one of the highest corporate tax rates in the world, and now they've at least brought it down to where it makes sense for people, both in domestic and foreign individuals to form corporations and pay the 21%, because 35%, and then you're talking another 5% on average state rate after deduction on your federal corporate return was around 40%. So we've shaved now 14% off the federal corporate rate, and that's just huge. And what's important, Neil, is that this change is permanent, whereas some of the other changes I'll discuss in a little bit are not permanent. They sunset in 2026 unless Congress prior to that makes the changes to the individual provisions of the tax code permanent. But these corporate changes are permanent. One other, I think, very interesting change to the corporate side of the tax code is that if somebody purchases fixed assets, depreciable property and whatnot, it's immediately expensable. And there are current provisions that allow that, but this is much more favorable, that allows somebody to just purchase a ton of fixed assets and get an immediate expense instead of capitalizing and then having depreciation over a period 3, 5, 7 years, whatever that period is. So that's also something that should, in theory, spur business development. So So in short, those are two significant changes. Two last changes that I'd like to make to the corporate tax regime in the United States is that one is that they repealed what's called the corporate alternative minimum tax. Even if you had a company that didn't owe tax under the main corporate tax calculation regime, there is something called AMT, alternative minimum tax, which could result in a tax liability. The AMT has in fact been repealed, so that's something that's significant. And then the second significant change is that under the prior tax law, if a company had net operating losses, let's say I lost money in my first 5 years of business as a corporation, I could carry those losses forward for 20 years and use the full amount of those losses to offset my ordinary corporate income. Well, for net operating losses that are generated after January 1st, 2018, you are only allowed to use 80% of those losses to offset future income. So in short, what they're trying to do is create a situation where you have lost companies in prior years that are now becoming profitable. They want you to end up paying some minimum amount of tax by limiting the amount of these new NOLs that are generated. So that's a significant change on the corporate side.
Well, there seems to be a lot of new benefits, certainly, for having money come back into the United States and doing business in the United States. That drop in the corporate tax rate is, like you said, very significant. And it is nice to see some of the big companies taking some of that money and giving it back to their employees and being able to share that money in and around the country. That's what drives the economy. So now that the US is very attractive for doing business and creating new businesses here, tell me about some of these other countries and what the benefits of maybe doing business in other countries is.
Sure. I mean, there's a number of countries that have very strong high-tech infrastructures. A couple that come to mind are India and Israel. And I travel to these places on a regular basis because I have clients that are out there and people that are both investing in the U.S. and on the other side, I have clients that are investing in high-tech in these countries. So with respect to a U.S. person that is investing in a foreign country that has in a foreign company in that country, insofar as they purchase the stock of that corporation and the value goes up and they sell it, they'll have capital gains, subject, to tax at either 15 or 20% in the U.S. And oftentimes in these foreign countries, in order to incentivize non-citizens of that country to invest there, they will exempt from tax these type of capital gains. So, it's a brave new world. I mean, there's other competitive countries out there that have exciting technologies. Whether it's natural resources or high tech. For example, if you look at a couple of the biggest acquisitions over the past couple of years, one of them was a company called Mobileye out of Tel Aviv that has a device that is used in automobiles. I believe GM bought it in order to prevent accidents by if you're getting too close to the car in front of you, it'll start beeping. If you're going over the lane, it'll start beeping. That's one company I can think of. Another one that was sold a few years ago was a company called Waze. It was also out of Tel Aviv, and what they did is they have it's almost like an app that gives you GPS. If you want to go somewhere and you want to get there the fastest, I mean, you'll type in the address and it'll tell you how to get there and how much time it's going to take to get there. And there were a lot of U.S. and other foreign and non-Israeli investors that were investing in these companies. So it's an exciting time to be doing business worldwide and making investments worldwide. And for a U.S. person that's sitting in Atlanta or Miami or wherever, they're still going to have to pay their U.S. income tax on any sort of gains they have from these investments.
Yeah, the world seems to be getting a lot smaller, and technology has really allowed a lot of these other countries to really compete with the US, I think, in many, many different things. But let's talk about some of the misconceptions that people have when they are thinking about filing their taxes from overseas. What are some of the common myths that people have?
Sure. Some of the common myths are one is that if I file in a foreign country, I don't have to file in the United States. It's just not correct. There is a limited exemption if somebody, let's say, earns less than, I don't want to, let's say call it $7,000 a year. I can't remember the exact amount, but if you have a de minimis amount of income, you in fact don't have to file a tax return. However, my advice would be for everybody to file a tax return, even if it's a zero tax return, simply for the reason you don't want to have gaps in your filing history where the IRS can send you a letter. By the way, John Doe, we see you didn't file a tax return for such and such year, and then you have to explain to them why you didn't file. So it's always a good idea to file. So that's one misconception. A second misconception, this is a big one, is that if somebody is self-employed outside the United States, and they're thinking, well, I don't owe self-employment tax. Nothing could be further from the truth. If someone's working as a self-employed person outside the United States, in most countries that does not have what's called a Social Security totalization agreement with the United States, you are still required to pay self-employment tax. Now, there are some planning mechanisms to legally avoid the self-employment tax, but for most people, they're not aware of it, and they will in fact then be stuck with paying 15% U.S. Social Security tax on their net income from their business. So that's a big one. And then the third one is the fact that if they have some sort of foreign financial account, which can just be a pension account or whatnot, that they are required to report that, and they may have to report it in two different places. The one place they would have to report it, if it's $10,000 or more, the total value of all these accounts, is to the U.S. Treasury, and that due date is now April 15th. You can get an extension up to October 15th to file that document, and it carries significant punitive penalties if somebody doesn't file that. And then in addition to that, if somebody who resides outside the United States has more than $200,000 for somebody who's filing separately or married filing separately, they have to report those foreign financial accounts on a Form 8938, which goes with their 1040 tax return. So there's a complex minefield that is out there with respect to people living outside the United States, and these same rules, Neil, apply to people living in the United States, and it's even worse for them, because if somebody's living in the U.S. and they miss a filing from one of these foreign financial accounts, the IRS and U.S. Treasury are much less forgiving for someone living in the U.S. because they impute the knowledge that they should have by living in the U.S., whereas somebody's living outside the United States, it's understood that they don't have the same ability to learn about these things as somebody who's watching, CNN, every day.
Well, again, with technology, these CNN and Fox and all these different programs are all over the world now, so they should be keeping up. But what fears might an overseas person have when it comes to filing their taxes? Maybe they've missed a couple of years and they just kind of maybe paralyzed and stopped taking action. What's going through their head, and how do you help them from there?
Sure. I mean, it's a great question, and you really hit the nail on the head, which is almost how all calls start to me when somebody calls me. And the first question is, am I going to get arrested when I'm going through customs entering the United States? So I would say as follows, that number one, if somebody hasn't filed tax returns, there certainly is risk to them. Traveling to the United States, I would say is a low risk, unless truly you have done some sort of criminal activity that could put them on the radar, because the customs computer and the IRS computer are not completely synced, although I have had people that have been asked questions as they are entering the U.S. and they're asking why they haven't filed tax returns. So I would say the first thing that somebody needs to do that is in a situation is you have to tackle the problem head on. By just burying your head in the sand and ignoring it, it's not going to go away. It's just going to compound and grow worse. The good news is the IRS has programs out there. One is a streamlined program. One is the offshore voluntary disclosure program to allow delinquent taxpayers, even those taxpayers that willfully did not file, to get current on their taxes and avoid criminal penalties. So the point is to make sure that you seek out somebody qualified that has handled these cases and successfully handled these cases for a number of years to get yourself current. And then once you're current, you need to make sure that you are complying by filing your tax return on an annual basis. And it's not just your tax return. It could also be this foreign bank account that I mentioned, and also other forms that could go along with your 1040 that people aren't aware of, such as Form 5471, which is if you own a foreign company or a certain percentage in a foreign company, you're required to report the activity of that foreign company on your U.S. tax return. If a U.S. person transfers money or property to a foreign company, you have to file a 926 form. And if you don't do this, you get hit with penalties of $10,000, sometimes even exceeding that if it's a willful failure to file. So in short, the key thing is try to put the fear aside and try to deal with this problem just like any other problem that one may have, whether it's a health problem or whatnot. You just can't ignore it. You have to take it on head on.
Now, Jason, it's obvious that people from overseas need help filing their taxes, but what are a couple of perceived obstacles that might prevent them from seeking the help of a tax attorney or even a CPA to try and direct them in the right solution? Is cost a factor, or just time, or what happens?
Sure. I would say as follows. One thing that people are afraid of is not being able to see somebody face to face and not sit in the same room with them. So there's ways around that. One, it's important for somebody who's residing overseas to verify the credentials of the individual you're speaking with. Okay, that's number one. The second thing is going to make a lot of CPAs who are not attorneys unhappy, but I'm going to say it anyway, and that's if there's any doubt in somebody's mind who lives overseas or even domestically as to whether or not they are not in compliance with the law, it's very, very important that whoever you have your first conversation with is a licensed attorney so that you have attorney-client privilege. Because anything that's disclosed to a non-lawyer is not subject to privilege, which means that if you go and you find a CPA and you spill your guts to him and it turns out that maybe there was some sort of activity that involves a regulatory nature and quite frankly is criminal nature, that is not privileged, and the IRS can subpoena that CPA and ask them anything. Whereas if you're talking to an attorney and you bring these problems to light, whatever you say is generally privileged. So that's something that's very important to bring up. So, again, two things is one, check the qualifications and credentials of whoever is on the, that you're looking at and finding on the internet. You can go to the State Board of Accountancy to verify their CPA license. You can go to the IRS website to see if they are in fact an enrolled agent, which is another designation. You can go to the Bar Association for the state that they're barred in and verify whether or not they have any sort of bar complaints. And then number two, again, if there's any doubt in your mind, if there's a problem that you haven't done something correct, make sure your first conversation is with a tax attorney.
So what would you say is the biggest mistake that overseas residents make when it comes to filing their taxes?
I think the biggest mistake that overseas people make is probably not using the right person to prepare the returns. I've seen returns that are prepared by U.S. licensed CPAs living in the United States that just don't have the background of preparing international tax returns for taxpayers residing overseas, and they'll miss fundamental forms that must be included with the Form 1040. That's the individual income tax return. And if you miss these filings, it can be disastrous. For example, on the Schedule B, as I mentioned before, which has interest and dividends at the bottom of that form, if you check no that you don't have a foreign financial account, and you in fact do, keep in mind when you sign page 2 of your 1040 tax return, you're signing under penalty of perjury. Okay, which means that you're supposed to read. I understand most people don't, but one is supposed to read through that return to make sure everything's correct. So whoever they're using, as a U.S. person abroad to prepare their tax return has to be qualified, because you can have a CPA that's great at doing a corporate tax return and doesn't have experience in doing individual returns, and vice versa. So that's one thing. And number two is kind of dovetailing with this is that when you file the tax returns, all the disclosures and all the forms that are required to be filed, they're not included with the return. I've seen returns that I've had to help clients fix that are missing Schedule B, the interest statement, that are missing Schedule D, that are missing the corporate tax filings that are required to be attached, that are missing the Form 8938, which is the disclosure of the foreign bank accounts. And each one of these forms, if it's missed, can carry a huge price tag if the IRS learns about it before corrective action can be taken by the taxpayer. So I think it's really, on two sides. Is one, the overseas person, finding the right person, and two, whether or not the professional has the knowledge and experience to assist them and file the appropriate return.
Now, Jason, can you give us an example of how you have helped one of your clients overcome these kinds of obstacles? What situation did they come to you with, and how were you able to help them?
Sure. So, recently I had a client that lived in Eastern Europe, and their profession is that they're a translator of books. They hadn't filed tax returns in approximately 20 years, and the reason they didn't file is because they really didn't know that they had to file. They filed tax returns in the foreign country of their residence. They didn't make a lot of money. Let's say $30,000 to $40,000 in this foreign country a year. So it was a modest amount. It wasn't a huge amount. But the problem was it was self-employment income. So in addition to not filing the tax return, and again, there would have been no income tax owed, but there was in fact Social Security tax or self-employment tax owed at the 15.3% that I mentioned before. So this person was panicking because they're now moving back to the United States, and they have fears of going through customs. And at the end of the day, these fears were unfounded because their failure to comply with the U.S. tax rules was not willful. And if your failure to comply is not willful, that's not a crime. It's something that can be fixed and be fixed in an efficient manner. And we were able to file 3 years delinquent tax returns pursuant to an IRS program, file 6 years of foreign bank account reports reporting her pension accounts and her foreign bank accounts. And at the end of the day, because it was a regular type of a situation that the IRS sees all the time, there were no adverse consequences other than that this taxpayer had to pay self-employment tax on their foreign earnings. But they were happy to do so, and now they can go back to the United States with a clear conscience and move to where they want to move and work in the United States and really just be able to sleep at night, which is a priceless gift if you really think about it.
Yeah, peace of mind. And sometimes you only get that by going to an expert that is able to answer your questions and really solve your problems for you. Now, Jason, tell me a little bit about you and what inspired you to become a tax attorney and a CPA.
Oh, wow. Well, I can tell you the way it started. I was a history major in undergrad. I went to Purdue University in Indiana, and I just realized after 4 years there's really not a lot you can do with a history degree other than going to law school. And after my first year in law school, I realized that I did not want to be a litigator. I didn't want to be in court every day. But I enjoy the numbers. So, I combined my law degree at that point in time. This is the mid-90s with MBA with a concentration in accounting. And I went to go work in Arthur Andersen. And I enjoyed the tax side of things because it was challenging in the sense that there's a lot of legal research and writing that goes in here. It covers the accounting side and it covers the legal research side, and it kind of brings these things together. And really, you can make a difference in people's lives, whether it's a company that's undergoing a sales tax audit for not appropriately charging sales tax on sales in various states, or whether it's an individual that's being audited by the IRS for having too many expenses on for their self-employment income, and people come with problems and worries and concerns, and by helping them solve these problems, you make a difference in their life. So it's not just a question of just filling in the returns, because let's face it, anybody can really fill in the return. It's a question of knowing how to fill it in and then solve a problem and help somebody, as we said, have that peace of mind and be able to sleep at night. I think that's a big positive of doing this job.
Yeah, definitely. I love interviewing people that really make a difference in people's lives by helping them solve their problems. That's, what it's all about. That's why we're in business. Now, speaking of business, can you share a lesson that you learned early on in your business that still impacts how you do business today?
Absolutely. I think it's important for anybody in any profession to know the limitations. So, yes, I've been in business for 20 years, but there are a lot of things I don't know in the area of tax. For example, I would never dream of taking certain things in the area of trust because I'm not an expert in there. So if there are certain things that you're not an expert in, you need to make sure that you punt and you refer it to a colleague that you know and that you trust. in order to make sure that your client gets the best possible service. It's not about trying to get as much fees as you can on your client. It's providing the best service to your client, and sometimes providing the best service to your client means that you bring somebody else into the picture that has the expertise that you don't have.
Yep, that is definitely true. Holds true across all business, not just with attorneys. Well, Jason Kovan, I've really enjoyed this interview today. You've given us lots of information, especially for those U.S. residents abroad, helping them with the questions that they might have about filing their tax returns in the U.S. Now, tell us, how can someone find out more about yourself and the law offices of Jason R. Kovan?
Sure. Thank you. We have a website. It is taxlawnow.com. That's taxlawnow.com. I can be reached at my desk at 305-600-5924, and my mobile is 786-899-2588. Feel free, anybody out there, to give me a call if you have a tax question, whether you're living in the United States with no foreign connections whatsoever, or if you're living in the U.S. or in a foreign jurisdiction, you have some sort of a problem or just general question. I'm happy to try to assist.
And again, you're in the Miami area, is that right?
That's correct, in Miami, Florida, and I do quite a bit of traveling, so the chances are at some point each calendar year I will be in somebody's calling from Germany. There's a good chance I'll be there and be able to meet with them in person as well.
Well, if you are outside the United States and you're listening to this, I do encourage you to contact Jason Kovan and get your questions answered, at least, so that you can have that peace of mind. But Jason, I really enjoyed this interview. Thank you very much for being my guest on Business Authority Radio.
Likewise, Neil. Thank you very much for having me, and I hope to be back.
And to our listening audience, if you like what you hear, hit that like button and share, and we'll see you next time on the show.
You've been listening to Business Authority Radio with Neil Howe and Greg Williams. To learn more about the resources mentioned in today's show, or to listen to past episodes, visit businessauthorityradio.com.